Happy New Year, good peoples. Let's jump into Round Hills Friday, January 2nd declarations. These have an X date on Monday, January the 5th of our new year, and they pay, as always, on Tuesday. So let's jump into NVIDIA, the underlying NVDW in Round Hill. Well, had a couple of negative weeks and then had a nice pop over the Christmas ending Friday. So it's short one day on distributions, guys. And then you'll have that again. So take that into consideration. Not bad when you went up, right? So last week was a 4-day week, and the following payment will be a 4-day week. All the others typically are 5 days. Occasionally you have a holiday, but clearly we had a Christmas off and then New Year's off. So, um, negative 108. When your NAV is less than your distribution, then that's okay. The problem is when you look over 18 weeks, NVDW had been a great performer with the leverage at Roundhill. That's very true. But NVIDIA doesn't look good on the chart. All one has to do is go right here back to 1010 and say there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 negative weeks and 3 positive weeks. Two of the three were very nice, very big pops, right? Of course, this one retraced, these two more than retraced this. And then they were followed by another almost $4 retracement. So same thing here. You had a 355, but add these three around it and it's negative. That's why you're negative here. And that's why now luckily it was minus 804. So you got paid $9.30. But I don't think many of you over 18 weeks, guys, that's 4.5 months, want to earn 2.71. Now, if you were in it and you made a lot of money, the question is, what's it going to be in the next 18 weeks? Well, you have to. I'm not here to forecast individual stocks. Sometimes I give you my thought or trending things that I see, but I'm not really here to discuss that. You know how I feel about a commodity super cycle and what should perform over multiple years. Do I have insight into what NVIDIA, the underlying, is going to do in the next 3 months? Not really. I can look at Elliott Wave, I can look at RSI, I can look at stochastics, I can look at a chart and try and guess, but that's not the purpose. The purpose is to tell you what they paid. There's the yield. But I think this is very important. So for the last 6 weeks, they earned 3.16% because they were pretty substantially higher. Over 18 weeks, not so pretty. Since inception, okay, this is what you're starting to notice on a lot of the big tech is not all, but you're starting to see this number increase. Of course, this number, you're always going to get paid a distribution. But just like here, you got paid 46 cents, but you went down 92. That's not a winning formula. You got paid 44 cents and went up $3.55. That's a fabulous winning. But overall, 7 out of 10, that's not particularly attractive, guys. That'll take a 15-20% gainer and it's not going to take long, another 3 or 4 day, $3 or $4 downturn is going to knock this into negative. So just be aware, right? And sadly, yeah, I think someone, if you want to be in income funds, you have to be somewhat of a trader. That's set it and forget it. It's even true in my beloved commodity super cycle, right? I always tell people get right and set tight because you got a multi-year run. But at the same time, they became volatile. Look at silver. Look at an explosion we had in silver. Tons of money were made if you were in physical or you were in silver miners. But there are times to take some off the table or protect it. Some of my smaller plays, I don't put stops on, but I think on the bigger ones, you have to consider it. You don't want to ride silver from $50 to $100 and back to $50. All right, so Tesla. Tesla, again, one of the better performers over this period of time. Look at this. 4.5 months, you made 47.11. Do you want to be in that one? Or would you rather been over the last 18 weeks? Well, that's pretty obvious where you should have, could have, and hopefully were, right? How's it doing this last week? Even last 6 weeks, guys. So this is why I break. There's nothing magic about that. It's just enough data to take a look at. And the same thing here. This is 4.5 months. This is 1.5 months, right? So this is 3 times the activity. But this is trending. You want to look and say, hey, the last week wasn't good, right? But over the last 6 weeks, we had 3 greens and 3 reds, but one of them was a minus 44, one of them was a minus 21, 121. Look at our 3 greens, 289, 191, 291. Now this made it a little ugly, right? Let's hope that rebounds and comes back. What did, let's take a look at the chart. I suspect it was down on Friday, but how does one know? Yeah, 32.24. So we're down another dollar. But again, you have a 4 more days, Monday through Thursday, the 5th through the 8th, to change things a little bit. All right, guys, let's keep moving through these. Again, I don't always call out the payment, but you guys can see it. And yeah, when I do like 33 of them, sometimes I make a mistake. The first thing I have to do is insert a line for a new week. And then a lot of times I just go up and grab the data off of this one, which has all 3 dates and the data, and I paste it in here, right? And then I go and, check and rewrite it. Well, every once in a while, the phone rings, something happens, somebody talks to me, I get distracted and I forget to change it. Okay. So mistakes are made. Do I try and go over it and look? Yeah. But there's a ton of data here. Like I said, this 3, 4 hours worth of effort. It's automated as much as it could be automated for the most part. All right, guys. So continuing on. And this is a case where it wasn't that long ago when everybody was hating on Tesla for Elon's Doge involvement. Then, this thing was less over here than here. So at least it's heading in the right direction. All right, Apple. Interesting. I mean, this is okay. It's always better. This is almost a 3-to-1. Only went down 41 cents. This is a little troubling, 3 of these, but they're not big. The 68 and the 11, right? So it's still got a 51-cent negative, but look at these. These two are excellent for Apple. But again, that's your makeup. So over the 18 weeks, it's fine. Paying 21 cents, not a big payer. How's it looking over a period of time? Well, 12 and 10. That's not a long range formula for great success. And then this is just plain ugly. Everybody knows crypto's been ugly, really ugly. Now, can that turn around? Sure. I hope it does. I mean, I sort of believe in Bitcoin. Um, Coinbase is probably going to go how Bitcoin and altcoins go, but I'm really not big into the whole crypto ecosphere and, what's the next meme coin and which technology is better. I have an understanding, right, of ETH, and where its benefits are versus pure BTC. And communication and other things. But if you want to get into that space, you're kind of forced now in the income funds to go with Coinbase and BTC. And as I said, I was a Michael Saylor fan for quite a while, but it looks like MicroStrategy is in trouble. That buy all the time is just like my beloved commodity super cycle. There are periods and there's rotation even within the sector. I got a video coming out later in my Patreons about what I think is starting to take off now within the commodity super cycle, and what wasn't a great 2025 performer but should be a great 2026 performer. So if anybody's interested, always at the end, I talk about my Patreon. I just simply am not going to give away all my vetting and all of my quality picks, both for income and for growth, and especially for growth. All right, so this is ugly. I mean, when you hit a week, look at this: one, two, three, four, five, 8. So out of the last 10, let's 3, 5. Whoops. 3, 4, 5. Yeah. Out of the last 10, you have two. Remember, I told you 7 and 3? Well, how about 8 and 2? That gets ugly very quick. And you've got a negative return for the 18-week period. And this thing can fly when it's doing well. 7, 153, 189, 214. So, typical, but look at these. There's a 14 up and a 12 down. But look at the 12. That's 20 right there. And look at this, 23 in two of them. So very volatile. One has to, and that's crypto for you, anything related to it. You make a lot when it's doing well, but you have to protect yourself. All right, guys. So negative, negative, right? This is particularly troublesome. This is the only moderate, okay, down 0.3. And if we want to look, I'm on my other screen, people, when I put this in. What did COIW do yesterday? Well, it was down, or was it? Hmm, I don't know why. Hang on a second. Right, because I get these for the closing price on Thursday so that they're week over week comparison. So on my other monitor, I'm trying to pull up, wouldn't you, you know the thing. Oh, it went up 20.95. I thought that's what TradingView was saying, but it had a red candle, so weird. Okay, so 20.95, that's positive, right? But again, that's just one day, guys. Can it sustain the Monday through Thursday of next week and then the Friday being up? But I'll take that. That's $1.09. So excellent for a one-day move. All right, guys, how about Palantir? PLTW. Well, overall, this is sort of the best fun of these first five that were launched in February. So these guys are, 11 months, not quite a full 11 months, but they're 10 and a half months in existence. You always like this. You get a positive number here, this is going to be green. This will always be positive. So when you have 6 weeks and you get a 1574, they need it because 18 weeks is 12%. You can't get that in a treasury or at the bank. So overall, this is ugly, the 13, but then this is awesome. So that's why you're winning here at the 1183. This one kind of more typified saying, hey, it's 4 days, right? But this one had a period in there too with Christmas. So maybe that impacted more of this, and then the following one will impact with the new year. All right, guys. So Palantir is clearly up there performing. I mean, I like it as a software company, but it's very prone if the NASDAQ and tech heavy stuff sells off. All right. How does it look at the bottom? Again, this is ugly. This is COIW for Coinbase. 28. You do not want to see something, call it 29. You don't like to see this number bigger than this number. It's clearly a bear market. And you don't see that here, right? But honestly, this was $2 or $3 not that long ago. So Palantir, like a lot of the tech sector, are being beat up the last few weeks, which seems to me that they don't go on to new highs. And even if they do, it's probably another month or two. And then, eventually when they sell off, it's harder, a much deeper retrace. But overall, you can't beat that for 10.5 months. That's just fabulous. All right. Amazon, not bad, 6.99, and this is even a positive number. Let's make a change there. I like that. Amazon, even though it was down 0.76, this isn't particularly attractive, but it's hanging on. One, two, three, four, five. See what gives it positive is right here. Without this, when we move to this will get picked up down here, and this is likely to turn negative because it has a minus 220, 240, minus 3, and a plus 87. So this next week, it looks like this will flip to red, guys. That's how you have to read these, right? This is an indicator saying, okay, over the last, 4.5 months, Amazon's done all right, the underlying. What did it pay? 43 up 2 cents. How about down here? It's staying positive, but it's creeping up. Berkshire Hathaway was negative because the weekly, these last two 42 cents and 4 cents negative, it's starting to get overwhelmed. So it's got four negatives, even though this is barely negative, four negatives and two positive. That's not a winning formula. And look at this, 18 weeks. Now, Berkshire Hathaway is definitely more of a recessionary type when the markets aren't trending well. What it owns should be okay. And the fact that it hasn't gone down a lot compared to some techs, but it hasn't gone up. Maybe when we roll over, it stays positive. Interesting fun. And when people say to me, like WPay, oh, we're really diversified. Yeah, United Healthcare and Berkshire Hathaway, most of the other stuff not, except for the gold and silver and the commodity super cycle. I'd love to see an energy play in here. Okay, a ZOM or something like that, ExxonMobil, Chevron, maybe they will have that. And then they get more commodity super cycle, then they really are more diversified. All right, let's keep going on these. Who? Oh yeah, this is getting ugly, guys. This is getting hammered. One, two, three, four, five, six. You know what saves this? Look at this. 11 and 4. Guess what happens next week? Let's just say we're down 2. Just pick something. That means we're down 6.5. Okay, down 570. Ooh, 6 down 11, 19. You're just going to get right now, they're setting in this middle one, right? But this rolls off. Now this rolls into this, so that's positive, but you're going to have two bigger negatives here. So just be aware of that. These things can fool you. It's just how my period's in. But this is still hanging on, guys. But look at who nobody can question. And I've always said I don't see the intellectual property or the absolute uniqueness of Hood, the underlying, so that over the next 5 years, this thing's going to double and triple all the time. I don't see it. Okay. People argue, oh, it's tokenization, it's this, it's that, always giving me. But really, at the end of the day, what do you use Hood for? It's a retail broker. Guys, it's not something that's monopolistic. It's not like Schwab, Fidelity, iBroker are just going to go out of business. And all of a sudden, Hood's going to have all of that business and super high margins. It's just the opposite. They were very innovative. They brought in the millennials, they brought in a lot of the younger generation with their mobile use. But quite honestly, today, anybody with a smartphone in the US can use their smartphone. You don't have to be in the US, but you know what I mean. Good 5G capability, speed. So if you're in another first world country, Canada, that's fine. But if you're out in the prairie or somewhere where the signal's not so great, you know, or you're like me, where you want two or three big monitors so that you can track all kinds of things. I don't day trade, but I do swing trade and I love a lot of data. Just putting this kind of stuff together. I'm accessing this while I'm doing this. It's just how I operate. Can I lay in bed and look on the phone and say, oh, yeah, I put that GTC order in and I can check real quick what's going on, but I don't live on my phone. It's to me the real estate, the screen size, until it can push that content back into my eyeball and I see it like a whole room, a whole wall type monitor. When that technology is fully available without, where you wear a set of glasses with a little side thing and it writes onto your into your eyeball, that technology is forthcoming. And as we have that, then it really doesn't matter what you use. And until then, to each his own. So for me, Hood's innovative, but so is a hot restaurant in town. What did they do? Oh, they have attractive waiters and waitresses. They do so, yeah, they made something, it's in an up and coming part of the city where people like to go. So again, those things pop up and they last for 3 or 4 years. They make great margins and then somebody out innovates them. So that's what I always say about Hood, guys. Anybody that just believes it's going to the moon, at the end of the day, it's a retail broker. I don't care if it's Carvana and somebody that's selling used cars. It's packaged well. People are going to move to it and they're going to utilize it, but other people innovate too, right? You have to have an intellectual property like in software where your functionality is just clearly massively ahead. And even hardware, NVIDIA's hardware. They massively were better with the GPU. Well, what about now with TPUs and a whole lot of other technologies that are forthcoming? It's hard to sit there on top and dominate. When you're selling hardware and you're getting 90% plus margins, somebody's going to knock you off. Even NVIDIA. AMD has given them a run in the mid-tier. Look at the retail and the gaming market, right? They come in and drop their margins to 30% and they give, more power per watt or something. It's hard to take away the top end from NVIDIA because they are innovating and they are very good. But again, sustaining 90% margins year after year after year where they're priced for perfection, when their market cap is greater than 99% of all countries in the world. Only the US and China have a GDP that's bigger than Nvidia when they had a 5 trillion market cap. So think about that. At the end of the day, it's a hardware company, a great hardware company. It came out and foresaw the need for graphics processing. Before you had a CPU, it's not that efficient. It's efficient in numbers operation. I can compute, I can add 1,000 numbers together in a millisecond. But can I display a game or can I display something at a graphics level? No. And they were the dominant giant. If you were buying NVIDIA way before there was ever an NVDW or an NVDY or anything else, you made a lot of money. And not without volatility. How many times did NVIDIA get cut in half? So I tell the people in the commodity super cycle, lasts for 8 to 12 years. You can get right and set tight, but it's difficult sometimes seeing, your position. Like I said, nobody wants to be in, silver where it goes from 50 to 100 and back to 50. And it happens sometimes, not all the time. Maybe it's only a 25 or 30% retrace. All right, guys. So just giving you some thoughts about the stock markets and preserving capital. I don't know how many people I've counseled, done a one-on-one session through my Patreon, which is a service I offer to help people with their portfolio. How do you make intelligent picks, right? I don't know it all. I don't have everything dialed in, but I have probabilities that I utilize, right? And the same thing here. If you're way up, if you bought HOOW at $50 and it went to 98, are you thinking about taking some off the table? You should be, right? Nothing goes straight up. All right, guys, moving along. So they're looking particularly ugly now because it's hard in the stock market to keep valuations at these levels. There's a lot of competition out there. All right. Meta, another great company overall, but all of these guys are struggling with their data center rollouts because of power, which plays back into some of my picks for 2026. I think there's going to be some fantastic opportunities in the energy sector, but which companies and which part of the energy sector? The energy sector is massive in size, guys. People talk about gold and silver within the commodity super cycle. The oil and overall, all the facets of energy are like 20 to 1. Hell, I think oil's 20 to 1 to the precious metals. So different sectors run at different times within the commodity super cycle. All right, guys, fabulous here, lousy here, right? So 4.5 months of pitiful. I mean, you're losing money. You're not just making 1 or 2%. You're in the income world to make an income, not to lose your asset value. Because, guys, it's a geometric reference, it's not arithmetic. And what do I mean by that? What I mean is, here's part of even that to counter the argument of house money. Say I buy a fund, Misty's a classic example. I buy it at $20, it goes to $40, comes back to 20. And I go, "Oh my God, 11 months, 9 months, I got all my money back. I bought Misty at 20. They paid me so much in income that I got my $20 back." And everybody said, "Oh, just ride it forever for free." Really? Makes no sense to me. Here's my argument with that. If it's going to keep going to 40 and back to 20 and do that all the time for 30 years, yeah, you could retire on Misty, right? And it's going to pay you that $20 back, okay, in 8.3 months. And if you bought it at 40, it's going to pay you the 40 back in 17 months, let's say. Well, reality, it doesn't work that way. It works for a while till it doesn't, right? Nothing goes straight up forever. It just doesn't happen. So if you're a big BTC believer, that's one thing. But do you want to ride Misty from, a lot of you chased it, right? You heard about it a year later, 18 months later, and they're still doing those videos, retire on Misty and talking Misty and getting all the YouTube views and listening to the fanboys. And then what do you have? Maybe your price is 30 and then the stock goes to 7 and then does a 10 for 1 reverse or 5 for 1. I think it did a 5 for 1. Yeah. So guys, here's my argument. Back to that argument. Oh, just ride house money. Sure. If you bought at 20, I did. I bought in the low 20s. I was in it for, 11 or 12 months, made fabulous money. But I realized this thing isn't going to last forever. And I just got out of it. Right? Did the same thing with Coney. I mean, Coney started going down sooner and it took longer to pay back, right? But still, you have to be aware of these things. Income fund doesn't make it magic, guys. It actually is worse. Because guess what? I know people say this all the time, but it's so true. You cannot, especially in the Yomax funds, capture more than about a third, maybe 33 to 40% with spreads and done just right of the upside of the underlying. So, if you were in MSTR in the good days and it tripled in a year, you went from 20 to 40. Well, you didn't go from 20 to 40 in a single year, but you can go from 20 to 40, but that takes like a 400% move in the underlying for you to get 100%. Because remember, you're being paid dividends, and those dividends are coming out on ex dividend date. So it's very difficult to go from 20 to 40. It takes a big move. Okay. But, but it's excellent. But here's my argument back to that. Why is it negative to hold it when you're in house money? Well, first off, it's dwindling. This is what I meant by the geometric versus arithmetic result. So at $20, let's say you're getting a buck 50 for your dividend payout. And at $40, you're getting $4. Just make up some number, right? Well, when you get back to $7, you're getting 50 cents if you're lucky. So that holding it forever. So the idea you owned it at 20 and went to 40, 20, went to 30, back to 20, and all that time you got at 8.3 months, you got house money. Well, first off, almost nobody just makes one purchase and sits there and never does anything. So you would have been trying to guess and load it up at 20 again, right? You would have doubled or tripled your position at 20. Yeah, you got house money in some of the shares. And then what happened when it went to 7? You lost your ass. Okay. And to me, the house money argument is if you're still in a bull market with that asset, it's not super volatile, that it's going to have higher highs and higher lows for 5 or 10 years. Well, that hasn't been the case with MicroStrategy. When it's failed now, it's failed miserably. Not saying that eventually Bitcoin doesn't go back up. So it has to go to all-time highs, and you hope that MicroStrategy survives long enough to get there. But I do think eventually Bitcoin will go to new highs. So my thought is, why would you set in an asset that's massively underperforming, even if you're writing it in house money? I would only do that in something that continues to go up for 5 or 8 years. Doesn't mean it doesn't retrace. So that's my argument. Not saying that I understand the math of talking about house money, but too many people just believe all that. And too many people believed the income story. You can't magically do that. Warren Buffett and all these great investors over time, they're happy with 10, 12, 15% because they know sometimes when they get in early on growth, they get doubles and triples and four baggers because they move into an asset because they have a lot of information you don't have access to about where there will be capital rotation and sector rotation. So enough said on that, but you have to be smart about this stuff. And sadly, it's some of the people that really need the income and they're aged, right? Maybe they've stopped working or their jobs have been taken away from the sector that they were in with AI and the changes. And now they have a fixed capital and they have a nest egg and they're believing that they can get these fabulous returns when in reality probably 8 to 10 or 12% is something. Hell, I can think of some energy plays that pay me 17% and should be excellent for the next 5 to 8 years. That doesn't mean they don't pull back sometimes, but you have to be smart about that because right now energy, in my opinion, is very undervalued. And things that are overvalued are AI and tech stocks. So keep that in mind for the long term, guys. All right. Netflix, another one that just shocks me altogether. I mean, having done the Yeomax world for a while and analyzing their funds when they really weren't competitors, Netflix was a fantastic, but that's just almost like an Elliott wave. It was on impulse moves, and Netflix was always going up. Their subscriber base was growing. And then what happens? And I make that point about Hood and the investment retail broker. It's not the company that just magically for 15 years is going to soar. No, Paramount's come along. There's competition, companies merge, right? Everybody looks at Netflix and says, "What is this?" Well, they do deals. They negotiate with the owners of the content, right? The studios, the independents, and so forth. And they put together content, and then everybody sees it soar because first mover advantage, right? Yomex had a first mover advantage. It's like, are you kidding? You're bringing us sophisticated option techniques to us, right? To the retail that you only used to do to the high end. But we didn't all know the warts until we analyzed and looked at them, right? I said, oh, I like the option strategy. I was following, doing the forensic accounting. It's pretty good stuff. Well, it's pretty good stuff when the underlying is moving and moving rapidly. But then I started watching the active management. The active management wasn't so active. I'd see a deal where they sold a call for the week and they sold it for $4. They could buy it back on a dollar with 1 day to go, and they didn't. And then the next day it crashed, or sorry, it soared, and they got capped and they had to buy it back for $7. So they took a $4 gain and turned it into a $3 loss, all because of poor active management. So that's when I threw my hands up and said, no, these guys aren't treating my money like their money. It's just a job to them. I did the best I could. I had 5 different funds I was managing. Sorry, I missed that one. Yeah, I'm sorry too. So I pull my money out. And they say, no, thank you, Yomax. I had a competition. So when I had PLTY, yeah, they had some big paydays, but I never knew what they were going to pay. I waited a month. I looked at the data and I said, wait a minute. Last month they paid $5. They made $8 this month. Why are they paying me 250? So I go to PLTW, which if you're in a bull market for Palantir, in other words, it goes up more than it goes down, I want that additional leverage and I get paid weekly so I can adjust. If they stiff me on a payment or it doesn't seem right, then I can get out of the fund. And it's easier to trade in and out when you're getting weekly results. Whereas I didn't need the money weekly. I actually wouldn't have even gone there had I saw that Yeomax wasn't doing what they should have been doing. And I'm not here to beat them up. Nobody's perfect, right? These fund families they're there to make money, guys, at the end of the day. They're not your friends. These YouTubers aren't your friends that are telling you to buy this. They're just there for subscribers. They make money. Sure, some are better than others. I've watched people. I know who the good ones are, and I know who the bad ones are, and I know who the really bad ones are. But always ask yourself a question. Do they need the YouTube money, or are they independently wealthy because they made a lot in the market? And that's what the draw is, guys. That should be your criteria. Who do you want to listen to? A broke YouTuber or somebody who's made a lot of money in the markets and gotten beat up and kicked around? And I imagine some of these YouTubers will be there in 20 years. 15, 20, 30 years. They'll be a lot better for that. All right, guys. So, anyway, one of my rants, you know me. All right, so Microsoft, because I like to tell it like it is. You have to. I couldn't sleep at night if I didn't. But hey, when I was go to church when I was younger, I remember one of the guys that would get up and the preacher would always ask them, right, to come up and talk. And it was the biggest, car dealership in the county. And they were early in the finance department. They used to just rip people off. They come in there and buy an inexpensive car, and by the time they were done, their payments would triple what they should be. And there was the guy was going to church and praying, and he was a good Christian and loved everybody and all that. In the meantime, he's just ripping off the people that could least afford it because the really smart, wealthy people were too smart to pay those kind of, the whole finance department at an automobile dealership, is a ripoff. Anything they offer you is three times the price that it should be for the most part. So, guys, it's no different in the stock market. Okay? There's just people waiting to take your money if you're not smart with it. Take control of your finances, put your money where it's treated best, and listen to people that actually care or at least have experienced the market for enough time to give you some sage advice. All right, so Microsoft negative. This is actually turned positive. 99, nothing great here. This is kind of ugly. That's why it's negative. You just don't want to be in the reason that you guys are in an income fund is you want income. And the idea in most people's brain is they don't think about total return. I know everybody's doing it now. When I was doing it, hardly anybody was doing it. I would just preach on it. Everybody said, I don't want to hear about NAV erosion. Who gives a damn? I just want 80% a yield, 100%. And that can be true. If you're getting 80% annualized yield, 100% annualized yield, and you're going down 5, 6, even 8%, who gives a darn, right? 80 minus 8 is 72. Give me a 72% return. I'm happy. But can you do it year after year? Or is the impulse wave happening now and the retrace is going to be just as brutal, right? You're riding that stock. You're riding Tesla from 100 to 400 back to 100. Only guess what? If you're in Tesla and you're in Yield Max, you're capturing a third on the way up and you're capturing 92% on the way down. How's that a winning formula? It's not. But if you're in the stock and you ride it from 100 to 400 back to 100, you didn't lose anything, right? But shame on you for not protecting it. As soon as it went to 400 and went back to 350, I'd be like, I'm going to have a stop on a portion of my shares. But I don't go in immediately. And what's your plan when you bought it at 100? Were you never going to take profits? What if it went to 1,000? Right? You have to have a plan in place. AMD, here's another one that's up and down like a yo-yo. AMD is a fabulous company. Anything I own in terms of CPUs has been AMD for ever since around 2017 when they did their first Ryzen. I like their low power supply. They weren't perfect. They had some glitches in the software associated with their stuff. But I overall, Lisa Su runs that company very well, extremely bright. And they get access to the good chips from TSMC and all of that, and they do a great build nowadays, right? Intel really fell off. The U.S. has had to subsidize Intel. They had Pat Gessinger, I forget how you pronounce his name, but he was supposed to be the be all end all new CEO. It didn't really work out. Sometimes it's hard to turn a battleship in a bathtub. Intel may get it back. I know in my era in IT, Intel was a dominant company in many, many ways, not just their chip making. All right, guys. So AMD, kind of an up and down. I'm mixed. I was short the SMH, the semiconductor index, made some quick money. I thought it was going to go down further, and it didn't. And now it's back up near that top, right? Kind of hanging around there. I got a mixed bag. Part of my Elliott wave to me says AMD could do very well over the next 5 to 6 months. But then I'm kind of like watching. I think if that SMH, the semiconductor index for a lot of the big chip players, if that breaks out to a new high and it's not that far, then I think it sort of validates the Elliott wave on AMD that says it could go up 50 to 70% over the next 5 or 6 months. So that's the kind of thing you want to be in if that happens. So I'm watching that close. I'll keep you guys abreast of that. Um, 330, no big deal there. This is fine. 29.43 over the last 4.5 months. Because when it rocks, it rocks. Look at this, 17 and 15. So if this is going to go on another run over the next 3 to 5 months, then that'll be fabulous. So I at least will keep an eye out on AMD, and that could impact Avgo later on here. 17 and 1. That's a great number, but the chips have led. My only concern, if we don't get the power, AMD makes more money in its data center products, right, to big business than it does in its retail space. So you and I buying a GPU from them or buying an AMD computer, AMD Ryzen or something. I know I got a Ryzen based mini PC when I was back in the States in October. I love it. Mini computer, very fast. I got an external eGPU and I got an AMD GPU in that, so it's a lot more powerful, 96 gig for memory. So I like that. Um, but I like AMD. I hope they can. I hope the semiconductor thing, but that just says to me that that means maybe the Nasdaq's going to hang on for another 3 to 5 months, which just means when they sell off, they'll sell off harder. All right, guys, but that's a phenomenal number, right? It's just this is what I think you can expect. Let's see if this can turn over, if we can get an 18-week period where you get 70 or 90%. Speaking of AVCO, here we go. So this one it just turned slightly negative, and this is the kind of stuff you get here. They've been not as they weren't selling off while they have a chip, so they could be considered a semiconductor company in some ways. They also have so much hardware and software that's not, obviously their hardware all has chips in it, but their chip is more in the communications area. So it's not quite in just the pure compute side. But still, they get impacted in that. Overall, it's hanging in there. But I don't like this. Look, 1, 2, 3, 4, 5, 6. So when this 9 disappears next week, you know how ugly this is going to be? Let's say they're just flat. So they're going to go to a minus 12. There's no way all you're going to get is $6 or $7. So this is going to go real ugly. So they've managed to hang on for 4.5 months, but this isn't trending well, guys. But let's see if AMD does and the semis move, then maybe there's hope for Avco here. Not bad, but this is trending up lately, right? I remember when they were, 13 to 1. Well, now it's creeping up, and Google's just been phenomenal, guys. But you can see that whenever you look at something and you see green on both sides, so you haven't lost anything in a 6-week NAV period. And of course, these are green because distributions are always green. But look at this, you had 3 and then back to red. 1, 2, 3, 4, 5, 6. What keeps this whole? Same thing here, guys. The 7 comes off in the 6 week. So we have -3, -6, -7, almost -8, and a 2.5. So there's a 5.5 negative, and then whatever the next week is. So this one turns red. Now it's got a fabulous return, and Google's been doing well. So it's really more about what's the market going to do. If the Nasdaq's going to sell off, Google's going to get hurt. If Nasdaq stays flat to goes up, Google will do well. It's hard to swim upstream, guys. Clearly, it's been outperforming though. So there's something that Google is doing in general, right? Warren Buffett moved into it. I think 8 months ago or something. So he saw something. And usually it comes down with the big guys, just undervaluation to its peers. See, when you can do this, that's how you can perform. This is always going to be positive. If this is flat to positive, just like when Hood was really running, that's what it was doing. Now this thing is growing negative like crazy. And these other funds here, these are all part of the new ones. It's really the only ones that are performing. These are 40. Yeah, these have a 6-week period plus. But look at this, stays negative on Costco. Uber, negative, negative. Now it's had a weekly, two positive greens on the weekly change. Oh, this is a negative. I was about to say two positives there. It's about offset. But 1, 2, 3, 4, 5, 6. 2 out of 6, that's not a good trend. Got 4 out of 6. But look at your negatives. That's massive. 7. So you're a -3. 1, 2, 3, 4, 5. And guess what happens? 2 moves off. So this is vulnerable as well, guys. Underperformer. ARM. Again, I always say this. I like ARM technology, guys. It's a chip technology. Apple was using it quite a bit. It's in some cell phones as well. It's different. But I'm not seeing ARM here perform at all. I mean, that's horrible. 20%. 1, 2, 3, 4, 5, 6. I had 2 greens and I've said 4 consecutive reds. So now we're going to lose. Well, we don't lose the big one. We lose the 46-cent one, but not enough to turn it around. -7, -2. It's trending less now. At least it's not dropping as hard. Now, Babo, I've always talked about, I like it, but I like it more when I look at, the underlying Alibaba and I say the PEs are cheap. And the Chinese, they have a big audience to sell to. And there's products on Amazon that people pick Chinese products. It doesn't necessarily mean that Alibaba is benefiting, but it hasn't performed. But if you stick with something over the long run, maybe this thing is down. What did it start at? 52? It's 39. 39's the new low. It was 39 here, bounced and back. So maybe 35. I'd have to go look at Elliott Wave and the technicals and say, when is this likely a buy? Because right now it's not yet. No question here on the commodity supercycle funds continue to perform. I mean, it's challenging. As I said, they've really gone a long way. This thing didn't come out till 1031 at $51. But it was just 61. I think a good buy is in the mid 50s. I mean, again, you know, gold's got up to 44 yesterday, closed around 43.30 or something. I mean, could we go all the way back to 36 to 3,800 on gold? Sure. I kind of wish we would because I have a little bit in GDXW, but more I play options on GDX or I go out and buy Nugget a two buy. I'd load up on options on GDX and buy Nugget if we can get down on GDX, if we can get to 3,800 gold and sell off. And that's what you have to do when you're in a commodity super cycle. You got to really load up on the sell-offs. Sure, you can look at stochastics and RSIs and trade in and out, but I have substantial capital that I'd like to see this back in the 40s, right? 45 or 50. I don't know if we can get it. We probably would at 3,600 gold, but been a fantastic performer. Again, you want to see green and green, right? When your NAV is up, GLW. So what the difference is, this is miners, guys, gold and silver miners. GDX is the index. This is physical gold. If you'd been in physical silver, they don't have a fund at Round Hill, but physical silver has been outperforming the silver miners. Not all of them, but the run's pretty substantial, but it's also vulnerable. I could see us going back to 60, maybe in an extreme case to 50. Remember, 50 was a 40-year ceiling. Every time we went to 50, we crashed. Well, we blew through that like butter. Went to 54, went back to 50, went to 54, and then shot up to 83. And most of the meaning behind silver is, excuse me, is it's not its precious metal, it's industrial use. It's a double metal, right? Has massive connotations in industry. Gold doesn't have that. But in this index, or sorry, in the GDX index, you have gold and silver miners. Here, this is physical gold. KSLV from Curve is an excellent, um, doesn't pay massive income. It's usually 50, 55 cents a month. It's a monthly, but it holds its NAV. It's done very, very well because it's tied to physical silver, not silver miners. Whoops, I think this needs to be black. Okay. And United Health. Again, I like United Health. I like more true diversification. It hasn't really performed over the last 4 weeks, right? It came out at 52.7. It's 50. You don't want to see that, right? I can't build a box until I get to 6 weeks. So we're not that far. But you got a 265 decline and you've been paid $1.85. So I'd have to go look at Elliott Wave. I'd have to understand it a little bit better. I like Eli Lilly a lot better. I wish Round Hill would have that. All right, guys. So that's what I got real fast on the summary. Because, well, let me take you back here. If anybody wants to check out the Patreon, www.patreon.com/TWC100. What do I do there? I have things behind a paywall. Starts at $5 a month, goes up to $50 a month. Various content, and the $50 a month, I do a 45-minute one-on-one consultation. Or you can just pay independently. You can join a $5 or a $10 tier to get the content and then ask for a one-time consultation. Just email me if you don't want to do any of those things or more questions about Patreon. Go out and check it out. You can join as free. You're going to get an occasional video about, where metals are going or something like that. Without paying, though, you're not going to get the individual miners and the picks and all the deep dive comparisons. Okay. So email me at this address directly or join our Patreon. All right, guys, let's get the summary real fast. This is all of these funds. Remember, these all launched at different times: 219, 618, 724, 1024, and then 1030. So who's the winners in each group? Who's has the best total return, right? When you consider NAV gain or loss and distributions. Well, in the first five, NVIDIA, Tesla, you're talking Palantir. Now, who's trending? Tesla's trending. All you have to do is go up here and look, right? So Palantir is only up 11.83 over the last 18 weeks, and Tesla's up 47. NVIDIA's up 2, right? Coinbase is not doing well. So then we go to our second five. Who's winning the second five? Well, Hood, the underlying, is hanging on. But I mean that by look at its trend. 11.16 over the last 8 weeks. But you also have Amazon at 11.62. So it's slightly beating it. How about the next five here? Well, Google is killing everybody else. Well, AMD is 83%, and this is these are all positive on total returns. This is all together, guys. This over here then talks about your 18 week. You look at your last 18 weeks, it's Google also at 48 versus Avco at 13 and AMD at 29. Everybody else is negative. I didn't buy these don't have an now we no longer have an 18 week, we only have a 6 week. So I talked about Costco, Uber, ARM, and Babo or Alibaba. So all negative, but who's the least of the negative overall since they've launched? 71 days, right? Well, you can see that Uber is 3% over those 6 weeks, 4% and 5%. The real loser is ARM, right? But overall, the least down when you add everything together, it's closer. The um, Costco was winning this. Now Babo is winning it, or Alibaba. And on these two, I mean, the gold is doing fine. 51% total return, up 6% over the last 6 weeks. But the miners, the gold and silver miners are doing better. All right, guys, that's what I got for you. Um, Again, if you want to join Patreon, go take a look at it. If you need some advice on something, email me. I can give a quick, yes or no answer on something, but if you have a lot of detail, this is what I'm in, this is what I'm trying to accomplish, then you just, we need to book a session for you. Okay, guys, gotta run. Happy New Year to everybody again. Again, I'm not a financial advisor, and this is not financial advice. Have a great weekend, people. Bye for now.